Welcome back to Iraqi Dinar Alert. He invested $5,000 in Iraqi Dinar. What happened next? In the world of unconventional investments, few stories spark as much curiosity and controversy as investing in foreign currencies. Among them, the Iraqi Dinar has become one of the most talked about options, especially in online communities. Some see it as a once-in-a-lifetime opportunity. Others call it a risky gamble. This is the story of one investor who decided to put $5,000 into Iraqi Dinar and what unfolded afterward. The beginning, a hidden opportunity. It all started when Daniel, a 34-year-old freelance graphic designer, came across a YouTube video claiming that the Iraqi dinar was massively undervalued and could soon skyrocket in value. The video talked about Iraq's oil reserves, economic recovery, and the possibility of a major currency revaluation. According to the creator, those who invested early could turn a few $1,000s into hundreds of thousands, or even millions. Daniel was intrigued. At first, he was skeptical. It sounded too good to be true. But as he dug deeper, he found forums, blogs, and social media groups filled with people discussing the same idea. Many claimed they had already invested. Some said they were waiting for a global reset. The more he read, the more it felt like he was missing out on something big. The decision, taking the risk. After weeks of research, if you could call it that, Daniel decided to go for it. He exchanged $5,000 USD for Iraqi dinar through an online currency dealer. The exchange rate meant he received millions of dinars in return. Holding such a large number felt exciting. It created the illusion of wealth. Daniel wasn't thinking about the risks. Instead, he was imagining what would happen if the currency's value increased dramatically. What if it becomes like the Kuwaiti dinar? He thought. What if this is my chance to get ahead in life? It didn't feel like gambling to him. It felt like a smart early investment. The waiting game. At first, Daniel checked the exchange rate every day, then every few hours. He joined online groups where people shared insider news and predictions. Some claimed that the revaluation would happen within weeks. Others said it was already happening behind the scenes. Every rumor created excitement. Every delay created anxiety. Months passed. Nothing changed. The reality sets in. After about 6 months, Daniel began to notice something strange. Despite all the hype, the value of the Iraqi dinar wasn't increasing. In fact, it remained relatively stable and very low. He started reading more credible financial sources instead of just forums. That's when he learned some important facts. The Iraqi dinar is a heavily controlled currency. It is not freely traded on major global forex markets. The Iraqi government manages its value carefully. A sudden massive revaluation is highly unlikely. This wasn't the explosive opportunity he had imagined. Emotional roller coaster. Daniel's experience wasn't just financial, it was emotional. At first, he felt excitement and hope. Then came doubt. Then frustration. Every time a new rumor appeared online, revaluation happening this week, his hopes would rise again. And every time nothing happened, he felt disappointed. He realized that much of the online community thrived on speculation rather than facts. The truth about revaluation. One of the biggest misconceptions Daniel had believed was the idea of a dramatic overnight revaluation. Here's what he eventually understood. Currency values don't jump massively overnight without major economic changes. And even when they do change, it's usually gradual. For the Iraqi dinar to significantly increase in value, several things would need to happen. Strong and stable economic growth in Iraq, reduced inflation, increased global confidence. Major policy changes by the central bank. These are long-term developments, not sudden events. The attempt to sell. After a year, Daniel decided to cash out. That's when he encountered another unexpected challenge. Selling the dinar wasn't easy. Unlike major currencies like the US dollar or euro, The Iraqi dinar isn't widely accepted. Many banks and exchange services don't deal with it at all. He had to go back to a specialized dealer, and the rates they offered were much lower than what he originally paid. This is called the spread, and it can significantly reduce your returns. The final outcome. In the end, Daniel managed to sell his dinar, but instead of making a profit, he lost money. Out of the $5,000 he initially invested, he recovered around $3,200. That's a loss of $1,800. Not devastating, but definitely not the life-changing gain he had imagined. Lessons learned. Daniel's experience taught him several important lessons. 1. If it sounds too good to be true, it probably is. The promise of turning a few $1,000s into millions is rarely realistic. 2. Not all research is equal. Reading forums and watching videos is not the same as analyzing credible financial data. 3. Liquidity matters. An investment is only useful if you can easily sell it when needed. 4. Emotional investing is risky. Daniel made his decision based on excitement and fear of missing out, not solid financial reasoning. 5. Diversification is key. Putting a large amount of money into a single speculative asset is always risky. Why people still invest in Iraqi dinar? Despite stories like Daniel's, many people continue to invest in Iraqi dinar. Why? Because the idea is powerful, low entry cost, high potential, at least in theory, emotional appeal of getting in early. It taps into the same mindset as lottery tickets or high-risk crypto investments. Hope is a strong motivator. Expert perspective. Most financial experts remain skeptical about the Iraqi dinar as an investment. They point out that it lacks transparency. It's not widely traded. Its value is controlled, not market-driven. There's no strong evidence of a massive revaluation. That doesn't mean it's impossible for the value to increase, but expectations should be realistic. What Daniel did next? After his experience, Daniel changed his approach to investing. Instead of chasing get-rich-quick opportunities, he started focusing on index funds, long-term stock investments, building emergency savings. He also began learning more about financial literacy. It wasn't just about losing money, he said later. It was about understanding how investing really works. Final thoughts. Daniel's story isn't unique. Thousands of people have explored the idea of investing in Iraqi dinar, driven by the same hopes and promises. Some are still holding on to their investment, waiting for a breakthrough. Others, like Daniel, have moved on, wiser and more cautious. The truth is simple. There's no guaranteed shortcut to wealth. Real investing takes time, patience, and informed decisions. So, was it worth it? If you ask Daniel today, he'll tell you this. It wasn't worth the money, but it was worth the lesson. And sometimes that's the most valuable return you can get.